I promised you guys to talk about my favorite gold mining stocks today, and we're getting to it, but we also have to talk about oil. Look at this. There's a major signal in the oil market on the short side coming either way pretty soon, or we'll get a great long trade. That's why we need to talk about it, because we need to be ready for our trades before they happen. So let's get into it, and then in the second half we're going to talk about my first favorite gold mining stock among the junior producers. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks and month. Okay, so two-part show today. I actually was all ready to just talk about my favorite gold mining stock among the junior producers, but then you see it here in the chart, what's happening in the oil sector with WTI oil. That's what we need to talk about. That's priority number one. That's why this will be the first part of the video. Second part of the video, I'll talk about my favorite junior producer. Let's jump into the oil chart. And here's what we have. First, let's zoom out. So we got the long-term downtrend. Actually, you know what? We're going to go all in on this. Here we go. Long-term downtrend. This is the red line. We got this horizontal support zone, the blue zone, that goes back to, I think, 2008. So it's a descending triangle formation. It was basically, if we break below this, we're going to go all the way down to this purple support zone here, which is around $40 to $42. Hard to believe, I know. We're used to $80, $90, $100 oil, but this is what the charts tell us. So this is the long-term outlook. Now let's jump into 2025. On the daily, we're here. And you can see, bad year for oil. We broke below the support zone. So we broke the descending triangle formation to the downside, super bearish. We regained it. This sell-off is the Trump tariff chaos. So we regained it after the fear came out of the market. Then went back below it because we got rejected by the 20. This brown line here is the 20. Didn't make a lower low. Made a lower low on the close, yes, but not intraday, which has the potential of a double bottom formation. We went up with the first tariff deals and overall worries about recession and stagflation coming out of the market. We broke the 20. Yay, this is good. Great rally in oil. And then you see what happened. The purple line is the 50. We went up to the 50, we rejected it, and now we're down here. And now we're fighting with the 20. And this is a very important setup. That's what we're talking about oil here, okay? So, as long as we are below the 50, the midterm outlook is bearish. The long-term outlook is bearish anyway, because the downtrend, the red line, clearly intact. We're fighting with the support zone as our life depends on it, which for a lot of oil traders it will. The gold line right here is the 200, so the long-term outlook is bearish. But what's happening short-term to midterm? That's what we're talking about. So we're stuck in between the 20 and the 50. What will trigger? Right? If we break below the 20, which we tried to do yesterday, and it held, then we want to open up a short position right away. We're at least going to test the old lows from the potential double bottom. And if we break below them, we're going down to 52. That's like a short stopover, and then we're going down to $42 to $40 a barrel. If we hold it, we'll likely go back up and test the 50. If we reject the 50 again, likely we'll roll over, and then the 20 will be broken. Things will only improve if we get above the 50 and above this zone around 64, 65. So we really need to get about over 65 to make a new high, to continue the uptrend. But even then, the potential is pretty limited because we're talking at 67, 68, we run into the upper end of the support zone and the long-term downtrend, all right? And 200 is waiting here as well. So if you want to know what is the number we need to get to as far as price for oil to get long-term bullish again, the good old days of the oil party, it's $70. We need to close above $70. We're far, doesn't sound like we're far away from it because we're at like 61. But it is if you look at all the resistance that's ahead of us to get there, right? 50, downtrend, 200. Three major factors that we need to break in order to turn to a bullish market in gold. Is this probable in this economic environment? Absolutely not. So, we have three scenarios right now, and my favorite scenario is this. We will wait right now what happens. We break below the 20, we close below the 20, last trading hour, you build a short position. That's what I may do. My preferable position would be this, and this is the better trading setup, because trading the break of the 20 is the more aggressive setup. The better setup is we wait to retest of the 50. When it rejects, then we go short. We can put the stop at the 65 level. So our risk is pretty limited. And if we break down, we can write it all the way down. And if we see that we are not able to break to a new low and form a triple bottom, we can still sell it, the position with a nice gain. Not at the bottom, obviously, because we need to wait if this happens, but maybe somewhere around here, like 57, 58. That'll still get us a nice profit. So this is why we need to talk about oil now, not after it happened, because after it happened, the oil price will move fast, all right? The 20, as you can see, is important, but the 50 is really the big one. What is happening with the 50? This is really interesting, and a decision is coming. So with that in mind, 8 minutes already. All right, I'm gonna start, because I promised and I gotta keep my promises. I'm gonna start with my favorite gold junior producer, and then we're gonna continue it next week. Because when you look at the gold price, let me open up the gold price for you real quick. As you can see, we are missing absolutely nothing. Monster up day yesterday, big down day today. It's a nothing thing. This is not new for you. You knew this. I've been telling you this for a long time. So let's jump into the presentation. If you watch this channel, you know, and if you don't, please subscribe to the channel, because that way you get all the important information, as you see with oil, ahead of time, right? Everybody can talk about trades after they happened and look like a genius. We want to know what's happening before it's happening. So in April, I was at a Mining Forum Europe. This is an excellent event for mining stocks. Look at this ugly guy right here. And there's another one. All right. So anyway, this is the representation from Alamos Gold, my favorite junior gold producer. This is what the presentation room looked like. And let's get to the presentation. So this is the corporate presentation from Alamos Gold. Now, we know presentations are usually business cards. So we got to take them with a grain of salt, but they give us good indications of what's going on with the company. Here's the first thing I like about Alamos Gold. Primarily Canada, a little bit US, they're developing it, and one producing mine in Mexico. But majority is from Canada. Excellent risk profile. I don't want to have anything in Africa, with very, very few exceptions. Botswana is fine, for example. I don't want to have anything in the risky Latin American area, and we don't even need to talk about anywhere in Eastern Europe. Second thing, they produce around 600,000 ounces of gold. They want to increase this by 50% long-term to 900,000 ounces of gold. So great growth. Look at in the middle section, the all-in sustaining costs. They're already way low. Remember, we're at a gold price of 3,200, right? And their AISC costs, the all-in sustaining costs per ounce, are around 1,275. Now we're going to use this even lower to 1,175, which is a pretty low AISC cost rate, quite excellent. So I love this. So we got three factors that I already like, right? Strong growth, low costs, great country profile, risk profile, very low. Average mine life, bottom right, 20 years, great. So this is not a company, even though they have increased their production dramatically, that basically has exceeded the mine life already. Actually, the opposite is true. And with this, we're going to leave and I'm going to continue this in the next video. This table right here, only the top three tables are interesting. You see gold production, they're increasing it every year. Excellent. But then the next one, that's the big one. They're also increasing their reserves. This is really important. This is the sweet spot. This is what Wall Street and the institutions want. I know this firsthand because I talked to them in Zurich. They want production increases because they want to see cash flow from operations increase, which you can see on the far right is incredible with Alamos Gold. But at the same time, we want to see mineral reserves increase. So Alamos Gold offers everything. The stock is expensive. That's the only downside, right? It is an expensive stock, so you want to buy it on weakness. We're getting some right now. We're not there yet. I'll show you the chart and we'll talk a little more about Alamos Gold in the next video. But at least I wanted to get the ball rolling and keep my word and don't delay this anymore. We'll talk about more companies in the coming weeks. This will be what it looks like. I might be invested in some. I might not be. I'm not a shareholder in Alamos Gold. I'm also not getting paid or reimbursed in any way by the company. Yes, I know the management a little bit, as you've seen in the pictures, but there's no business relationship. I am interested in opening up a position in Alamos Gold, but only at the right price, which we're not there yet. But fundamentally, this is one of my favorite gold mining stocks. If you like this video, please remember to subscribe, help out the channel. It takes you 1 second, means a lot to me. Muchas gracias. And tonight, big night for me as a Knicks fan. Go Knicks, F Boston. Let's go. Have a great weekend.